What's up, guys? It's your boy, Mr. Fit to Flourish, and today I wanted to talk about how to enter and exit trades. All right, enter and exit trades. So, what does that look like? It looks like getting in, letting it run, or when you get in, you're gonna get out of that trade because you got stopped out. You're setting a stop loss. All right, this is gonna be a very quick presentation, and it's gonna be probably the simplest video that you've ever seen when it comes to how to enter and exit trades. Now, we're talking about Japanese candlestick charts when we're talking about entering and exiting trades. Okay, Japanese candlestick charts, and this is going to be primarily day trading, but you can use these same exact rules when entering swing trades or position trades, etc., etc. But this is more catered towards like a day trade. You're looking at a 5-minute candle or a 15-minute candle. In this case, it's going to be 5-minute candles. Okay, but you can take these rules and kind of bend them. All right, these aren't like definite rules, okay? Like, don't listen to one person saying that's not the right way to do it or that's not the best way. The best way is the way that works for you, all right? Who cares about ICT, SMC, ABC, 1, 2, 3 chart patterns, order block, blah, 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 all right? What works for you, all right? Do you not use the charts? You just use fundamentals? Don't listen to another trader and what they're doing because different things work for different people. Anyways, this is like standard Wall Street ways to get in. Okay, these come like if you read a book on trading, this is how they say enter like this, exit like this. All right, that's the first way I'm going to show you. I'm going to show you just basic ways, and then to enter and exit, and then I'm going to show you how I enter and exit trades. All right, which, like I said, do what you want to do with the information. Anyways, number one, the rule to entering trades is you want to enter in the direction of momentum. Okay, so where do you think price is going to be going? All right, what does that look like? Usually it looks like a big move in one direction or the other. Price can only go up or down. All right, so the main thing you want to do is you want to enter after what's called a trend bar. What is a trend bar? So for those of you who don't watch the videos or don't know price action, a trend bar is a big bar that contributes to the direction of a trend. So this is a big green bar. That's a trend bar. This is a trend bar. This red bar is a downward bar, so it's actually a trend bar. That's pretty big. These small little bars, you don't want to enter after these little bars. These are non-trend bars. They don't contribute to the direction of the trend, and they don't give you any information on whether or not this stock is going up or down. Okay. Anyways, you want to enter after a trend bar, and typically you want to enter after a level is broken. Okay. So in this case, we broke above the bodies here. Okay. We broke out of this range. So how do we enter on this trade? So you need to wait for the bar to close. Okay, this is going to be considered your signal or confirmation bar. Okay, your signal bar or your confirmation bar. All right. So wait for the bar to close, and then you would enter on the open of the next bar. So that'd be right there. This is where you enter. Okay. So at this price of 246.62, if you're buying options, you would purchase an option. Sorry. You would purchase option contracts right when this bar opens. Okay. So that's how you enter trades. You wait for a signal bar that is breaking above a range. There's other methods too. So if you see like a big bull bar here, we're holding this low, we get a bullish engulfing. You see this trend bar, that might be your sign to get in on this next candle here. But what most people do is they're going to wait for a bar to take out a level. Sometimes people might want to wait for a bar to take out VWAP, which is volume weighted average price. Let me kind of show that real quick. So some people might want to wait for a big bar to close above VWAP, volume weighted average price, and enter after that. But really, we're taking out this level right here. All right, we're taking out that level, and we're getting a big move up. And in this case, this shows you why you would want to wait for the bar to close. Because look, this was probably a big green candle here, and some new traders are like, oh, it's a big green candle, I want to get in. They get in, and then all of a sudden, this becomes a topside wick and it moves down. Okay, so that's basic way to enter a trade right there for a bull, for calls for a bullish play. Now entering a trade to the downside, we talked about breaking structure here. So Look at these lows we're putting in here. So again, you don't want to enter trades when this is big in green, because you have to wait for the bar to close. The bar actually pushed down, or big in red, sorry. The bar was coming down, and then it ended up closing above these lows. So it looked like it was going to be a big move down. If you entered, you got cooked. All right, you got cooked. What you want to do is wait for that low to be broken. So we had a bar break that low and then closed below that low. So then in this bearish direction, if you're buying puts or you're going short, you would want to enter here. So after this bar closes, you enter on the open of the next bar to the downside. All right, basic ways to enter a trade. Now we're going to go into exiting trades, basic ways to exit trades, or how to set your stop loss. So if this is my confirmation signal bar right here, this big green bar, the basic way to set my stop loss is to set a stop one tick below the low. And when you enter, I forgot to mention that it's considered one tick above, and a tick is the smallest unit of measurement in trading. So it'd be 1 penny basically in this case. Like, oh, after this closes, you enter 1 penny above that close. Okay, pretty much on the open of the next bar, but 1 tick above. So you enter your entry long. Entry long is always going to be 1 tick above your signal. And then your stop loss for long is going to be 1 tick below. And I'm going to make this red right here. So your stop loss is going to be 1 tick below. Now, so the general stop loss is like usually like, okay, if price comes down and smacks that, then just exit. Okay, just exit. And then for going short, so going short, remember this is our signal bar going short. So our stop loss is going to be 1 tick above. So if price starts to go back up here and goes up to here, then you would want to exit. Now I don't exit like that anymore. Okay, now let me show you how I do this. So when I enter, I still enter with the basic entry rule of getting in after the signal bar closes. I'll enter here and go long. Sometimes I'll wait. I'll wait. Like if this bar is moving up, it's above the range. If there's like 10 seconds left on this candlestick and we're like right here, I'll enter because I know in those 10 seconds, this is not going to come all the way down. Sometimes it will, but it's very rare. If there's been a lot of upward pressure, I'll just enter and then let it continue. But that's how I enter. I enter the same way, 1 tick above, or just a little bit premature. Okay, and then my stop, if the next bar starts to come down and it hits this, I'm not exiting. I'm only going to exit if we close. If we have the next bar or another bar, if we have a bar close below this low, then I will exit. So that's how I do my stop losses. And it kind of depends. Sometimes I'll do a stop loss. I'll show a couple other stop losses in a second, but most of the time I'm doing my stop loss like, okay, this is my signal bar. I'm entering. If we close below that low, then I know that we're going to have a change of direction to the downside. And then in this case, because sometimes you get a retest. So we have a level here that we just broke. And you might get a bar move all the way back up, and then it becomes a wick, and then we just end up moving back down. Okay, so I'd like to wait to see, hey, are we going to close above this? If we close above this, then this is likely going to just rip back to the upside. All right, so those are basic entry and exit strategies. All right, now the next thing I wanted to show here is other possible stop losses that you can do. And not really other entries, because that's a really good entry. Just waiting for a cross, like if you get a 920 crossover. Here we go. Boom, boom. Okay, so yeah, like right here, this is a 920 crossover. The 9MA is crossing above the 20. We have a nice bullish engulfing bar. This is my signal bar. This would be a signal bar here because we're crossing above something. And then you would enter on the open of this next bar. Okay. So just the crossover strategy is just a pretty big strategy when it comes to entries. When it comes to exits, okay, to stop losses, right? So one other stop loss that I like is I like the 50% stop loss, which is also basically like a fib retracement. Okay, basically a fib retracement, but I mean, I don't know if you guys know what that is. I have a couple of videos on it, but if a bar goes more than 50% down the way of this big bullish bar, the likely move is that it's going to continue to the downside. Okay, that's just like a rule that you'll see in price action. So if a bar closes more than 50% of the way down, it's likely to continue because there's enough downward pressure to take out all of that buying pressure. So a lot of the time it can continue down. So sometimes just depending on what's going on in the sessions, I'll wait to see a big move up, and then if we have a bar close below 50% of the way down, sometimes I will take that as an exit because I'm like, oh, this should be, there's a lot of momentum, this should just continue. But if we get a huge move down, like in this case, there was a big move down, but then we got buyers step in and this became a wick. So a lot of upward pressure. But if this just came down and then closed 50% of the way down, that's almost like a bearish engulfing bar. Okay. So sometimes that will be my exit. All right. And then other times you can, depending on how long you're planning on holding the trade and how much time you have on your options, you might enter here and then you might set your stop to the low of the day, just depending on your risk to reward, like where you think we're going to be going. Okay. And you might look at your long position. You might enter here and be like, okay, we have enough momentum. You set your stop to that. And then of course you want your 2-to-1 risk to reward ratio minimum. So you might be like, okay, I think we're going to end up there somewhere. So I'll set a wider stop. So you don't have to follow what I just showed you guys for stop losses and stuff like that. You can literally just like kind of manipulate it based on statistics that you collect. But I've seen from my trading, like that 50% mark, like usually like the way I trade with momentum, the 920 crossover, momentum indicators going up. So everything should be timed perfectly so that if we go down 50% of that bar, I know something's up. I know something's wrong. And it was like a fake move or something. So anyways, collect your data. This is just basics on how to enter and exit trades. If you have any questions, feel free to drop them in the comment section. Like, share, subscribe, all that YouTube stuff. It's your boy, Mr. Fit to Flourish, and I'm outie. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.